Good morning, everyone. We are Team 242 here to present the credit research report on Bharti Airtel Limited. In the first half of our presentation, we'll be deep diving into the business risk analysis, and in the second half, we'll be analyzing the financial risk, followed by our rating and recommendation.
Starting with the executive summary, Airtel has an excellent score in business risk profile on account of diversified presence across the geography and across the segments, and the ability to mitigate the technological as well as the regulatory risk. Going forward with the solvency and distance to default, a probability of default of 0.23% is moderately safe, and Airtel has high DE values due to the extensive capital expenditure incurred. The liquidity performance is satisfactory, and Airtel African performance has helped the firm to maintain a consolidated revenue even when the Indian revenues were bottoming out. And finally, the ability to raise funds from capital markets, followed by strategies for improving the tariff up, and good corporate governance policies give us a stable outlook for the firm.
Bharti Airtel Limited, one of the leading global telecommunications company, is currently operating in more than 16 countries spread across Asia and Africa. Currently, its parent organizations are Bharti Enterprises with 28% stake and Singtel with 39% stake, which is expected to rise post the upcoming rights issue. Born in 1995 in New Delhi, the company spread its wings across other states, completing a pan-India operation in 2005. In the last 7 years alone, it has completed 7 mergers and acquisitions, with the win-win Tata Teleservices deal being the latest one. With a successful history, it was able to increase its customer base from 80 million in 2007 to more than 300 million as of December 2018. Moving on to Airtel Africa, it set its footprint in 2010 with a major mergers and acquisition deal with Zain's operation in more than 15 countries. In Africa, it holds market position number 1 in 4 countries, number 2 in 8 countries, and number 3 in 2 countries. It was successful in increasing its customer base in Africa with 23% year-on-year. It also made its recent profits with $92 million in 2017 with $112 million in 2018 December. And it was also able to, most importantly, Airtel Money in Africa grew with 29% year-on-year throughput, which is remarkable. With a strong vision, value, and objective, it helps to cater all its 9 key stakeholders. You can have a look at the Airtel service portfolio in India, and in Africa, it just operates in 2 segments, that is mobile services and Airtel Money, with 45% of its revenue coming from mobile services India and Asia, and 33.1% is coming from non-mobile business operations, and 25% of its revenue is coming from Airtel Africa. Airtel has a unique business module which it caters with 6 different capital as shown, and with this unique business it is able to roll out innovative strategies like Mera Pehla smartphone to provide affordable smartphones to the even normal customers, and it has also collaborated with Zoom to provide high quality communication to the customers, collaborated with Ericsson to provide to add automation and AI in their technology and business. It has also rolled out the massive MIMO as a part of its network transformation program. Moving on to the segment-wise performance, we have seen a marginal dip in its 2 segments, that is mobile services India and South Asia, as well as the home services. But this dip has been offset by a revenue increase in 4 other segments of them. And it is also vigorously working to increase its mobile revenue sources in India by rolling out strategies like minimum recharge plans, Project Leap, Project Next, Airtel Thanks, and similar to those. They have a beaming presence in 16 countries spread across Asia and Africa, and its network presence is present in more than 50 countries with over 7 Gbps satellite capacity. Moving on to the corporate and management governance, they have it's known for its high standards and principles of corporate governance. You can have a look at the corporate committee, and they have 9 committees, with the 9th one being the committee of directors formed recently post their financial crisis that they're facing, which exclusively takes care of the balance sheet and the to strengthen the capital structure of the company. The promoter and promoter group have the maximum shareholding capacity, so we can any day expect efficient and better management decision. Moving on to the industry performance. The industry as such in India is divided into 3 major segments: the wired, wireless, and the internet, with a growing with a CAGR of 17, 19, and 60% CAGR respectively. With such growing demand, also the industry recently has reduced from a size of 45,000 crore per quarter to mere 28,000 crore per quarter due to Jio's entry and the price wars. But there's a massive data consumption increase, and it is expected to grow to 2 GB per day per customer. So with this growing demand, we can expect that the customers are ready to pay any price. So the players can take an advantage of this and increase their tariffs to make themselves in a greener bed. Moving on to the competitive positioning, we have seen that Vodafone Idea holds the market leader, with Airtel being second, and Airtel is the difference is marginal, and Airtel is fighting hard to win the first market share by rolling out, accelerating their 4G, and also rolling out. They are also started tie-ups with OTT players like Netflix, Amazon, Z5, EDTV Hop, etc. Moving on to mobile market in Africa, which is one of the fastest growing economies for mobile market. The customer base, the data consumption, everything is growing at a very decent pace. But one thing to be noted here is, in Africa, the banking penetration is very low. So there's a lot of scope for mobile money to grow. So, and Airtel is taking good opportunity of this. Moving on to competitors of a peer comparison, we have taken both Indian as well as international players. In international, we have taken both African as well as global players.
Moving on to the financial analysis, the revenue and EBITDA for the Airtel has been declining for the past couple of quarters on account of the competitive industry, but the revenue has bottomed out in the last quarter at 205 billion INR, up by 1% year on year. The drop in EBITDA is on account of the increase in network costs and access costs, because of Vodafone Idea merger that impacted the tower rentals and loss of subscribers to Jio. Following with key performance indicators, the ARPU stands at 104 right now, and it is slated to hit 118 by the end of this year on account of various initiatives like minimum ARPU plans. And the subscriber reduction is on account of company's policy to weed out the non-revenue generating customers. The churn has increased to 7.3%, but that is on account of differences in the postpaid customer segment. And the data KPIs are exceptionally strong, with the data usage increasing by 190% year on year, and 4G customer additions of 11 million in just one quarter. And Airtel's 10.5 GB per user per month is comparable to that of Jio's 10.8 GB per user per month. The OPEX productivity has largely remained constant, whereas the CAPEX productivity, we see a decline because of the hit taken by the revenue stream, even when we have a capital expenditure of around 224 billion. The ROA and ROE is declining because of the hit taken by the PAT, and that is because of higher depreciation cost and higher network and access cost. When we do the peer comparison by taking 4 major competitors, that is Vodafone Idea, Reliance Jio, Tata Teleservices, and BSNL, we see Airtel has fared above the industry average. Airtel Africa has seen a revenue growth of around 11.2% year on year, and Airtel Africa has been able to reduce the consolidated debt to $3.7 billion from $6 billion in just a quarter's time. Followed by that, Airtel Africa EBITDA stands at 37.1%, and their fundraising capability is substantiated by the points like 1.25 billion raised from 6 PE investors and $200 million from Qatar Investment Authority. In capital structure, the net gearing ratio has decreased to 58% from 61% a year ago, and the DE ratio stands at 1.42x. Still, the same time, the long-term debt to equity has fallen to 1.08x, which shows the fact that short-term borrowings have risen, and approximately it has happened by around 50%, and the net debt has increased by around 33% CAGR over the past 3 years. In long-term borrowings, around 39% is deferred payment liabilities on account of spectrum repayments, and we see that 71% of long-term borrowings comprising of NCDs and deferred payment liabilities have a repayment maturity of 2 to 5 years. That means we don't have any large chunk of repayment in the coming 2 years. And regarding currency mix, more than half of the borrowing is taken in INR and 1/3 in US dollars, and it is the policy of company to do the transactions in the functional currency, and the risk associated are hedged through derivative and interest rate swaps. The DSCR and ICR have come down over the years because of a decrease in EBITDA, but net debt to EBITDA for Airtel is way better compared to the industry average, and it is supposed to come to 2.8x after the proposed right issue from the current level of 4.4x, which is a positive factor. The WACC for Airtel is now 10.4%, and that is also less than the industry average of 10.6%. And Airtel has been able to reduce the finance cost by around 34% year on year, in the last quarter itself. Moving forward, for liquidity performance, the asset turnover ratio is validated by the comparison with the industry peers, and that stands out at 0.35%, way better than the industry average. Even though the current ratio and quick ratio took for a dip in the last year because of increase in short-term borrowings, they are regaining their stand, and Airtel feels that unrestricted free cash of around 12,000 crores plus proposed right issue will be enough to tide over the liquidity position in the coming year. The cash flow from operation has increased by just 40% to reach 6,000 crores just in the last quarter. And Airtel, in the quest to fund for capital expenditure, it has taken a CAGR growth of around 10% in cash outflow from investment. The red flag here is there is a dip in free cash flow, but that is because of the excessive capital expenditure, even when the revenue sources are yet to stabilize right now. The main highlight in quarterly financial performance of Bharti Airtel Group is the reduction of total debt equity ratio to 1.45x. And moving on to the rating history, we find that both CRISIL and ICRA has downgraded the Bharti Airtel rating from AA plus negative to AA stable in November-December 2018, and that is on account of the modest debt protection metrics and the highly competitive industry in which Bharti Airtel is operating. Moving on to key rating drivers, the positive ones being the proactive management and efficient strategies to bring down strategies for deleveraging and for improving the headline tariff through various initiatives, followed by diversified presence across the geographies and segments like IoT, cybersecurity, tower infrastructure, etc., followed by excellent KPIs that Bharti Airtel has, and the ability for Bharti Airtel to raise funds from the capital markets. The prominent one in the negative key rating driver is the continued competitive pressure in the industry, but that is slated to ease down once the consolidation happens through. And the telecom industry itself is a highly levered industry. Bharti Airtel is now at a highly levered stage, but they are doing proactive steps to bring the leverage down. And cost is another factor. Initiative like War on Waste has been used by Airtel to counter this as well. And the exposure to technological risk is, we are poised to overcome that to various tie-ups with firms like Ericsson, Ciena, etc. And the key highlights in the investment summary includes the proposed right issue and bond issue worth 32,000 crores that is expected to bring the net debt levels to 30% lower in the coming 2 years. And another point being the proposed stake dilution in the soon-to-be merged Indus Infratel Tower Company and refarming of spectrum in 2100 and 2300 megahertz to churn out more 4G data customers. In credit rating model, we have calculated the Altman Z-score for Bharti Airtel that stands at 1.58 compared to Vodafone Idea's 0.87. We have gone one step ahead and calculated the distance to default and probability of default using KMV model. And we see that right now it stands at 0.232%, which is up from 0.06% a year ago. That is due to the increase in short-term borrowings by 50%. And in Bloomberg default risk scale, Airtel is given a rating of IG9 that corresponds IG9. And for credit rating metrics, we have taken into account 6 factors. The number one being scale, and that we have given a AA rating for scale of operation because we expect the revenues to touch $882 billion by 2020 and an EBITDA increase of 6.2% by the same year. And business profile, as discussed already, is really strong. Hence, we solicit a AAA rating for that. Coming to profitability and efficiency, we solicit a AA rating for it. This is because we expect the EBITDAs to hit 40% by 2021. And the liquidity performance of Airtel is satisfactory as of now. Coverage ratios, we give A rating for coverage ratios. That is on the fact that the DSCR and ICR are slumping as of now, but the proposed right issue and stake dilution is slated to take care of the coverage ratios. For leverage ratio, we recommend a AA rating on account of diversified debt structure that Bharti Airtel has, the decrease in gearing ratio and optimal value of debt equity ratios. Finally, the financial policies of Airtel for cost cutting and bringing the leverage down are exemplary. Thus, we reaffirm a AA rating for Bharti Airtel with a stock equal weight. We are not upgrading Bharti Airtel as of now because Airtel is going to a turbulent time, because the industry is really sensitive to prices and there is too much competition out there. Bharti Airtel's financials aren't strong enough right now, and the debt levels are too high not to upgrade and not to accord an upgradation.
On the same hand, we're neither downgrading it because even in such stringent competition, Airtel is coming out with new strategies for customer stickiness and growing high ARPU customers and rolling out new strategies, and also it is making tie-ups with numerous other companies. Like recently it has also applied for in-flight license, which is the first telecommunications company in India to apply for such a license, which is expected to be cleared. And in the future we expect that with Vodafone Idea not performing in par with Airtel, we expect that the competition will just come down to two players, being Jio and Airtel. Thank you.
So, several times in analysis, you alluded to the fact that the short-term borrowing of Airtel has gone up. How would your analysis change if it was the long-term borrowing which has gone up instead of the short-term borrowing? And would that affect your overall view?
Ma'am, if we increase the long-term borrow, right now it is highly levered. So we don't suggest an increase in leverage as of now. So we would go for a rating downgrade if long-term borrowings increase substantially. Right now we feel the leverage, it is leveraged so much because of the excessive capital expenditure that the Airtel has to go through. So probably in that case we will.
We would have expected a downgrade had they increased the long-term borrowings instead of increasing the short-term.
Secondly, what is the biggest risk to this rating?
Risk to the?
This rating. What is the biggest risk? What major event could happen that would change this rating?
So ma'am, currently all the telecom players in India are facing one risk, that is price war. So that has to stabilize. That is the only solution to stabilize the entire industry, which is at its low, which it has never faced. And secondly, most of the countries are upgrading to 5G, and India is also trying to with the 5G spectrum coming up. And one of the major risks that the country faces here is for 5G. One is most of the backhauls are microwave in India, which has to be converted to fiber in order to take that capacity. And on top of that, the entire network has to be split into small cells. That means every third metro pillar should have the 5G spectrum capacity. So in order to take permission with Indian bureaucracy and high levels, it is not easy to take permission from every third person for installation of the required network thing. So there is a regulation risk also. So you get the point.
So basically, if we are in the quest for 5G and we lever the firm, again, we extend the leverage of the firm, and if the revenue doesn't stabilize due to the absence of consolidation in the industry or price hike, that is the biggest risk that Airtel could take as of now.
So your recommendation is survey. So what is the rating for competition and what is the difference? If they are better, why better? If they are worse, why worse? What is the difference?
Sorry, sir, can you just come again?
You are recommending double A for Bharti Airtel.
Yes.
Competition like Reliance, Jio, Vodafone Idea and others. What is their rating and why is it better or worse?
Yeah. So let's consider the case of Jio first. So any day they stand have better rating than Airtel with a AAA rating, because one is it has got a very strong parent company, and the pace at which its customer base is increasing, be it in any segment. So that's one strong reason. And considering the case of Vodafone Idea, they are still trying to settle with the synergy that they've got out of their merger. So they're yet to come out with the best. And very high capex and the financial ratios being ill. And also their KPIs are still a little below Airtel, even after the merger. So this is a huge disadvantage. So we even doubt if they don't come up with the right strategies, will they be able to withstand the competition?
By the time the synergy effect takes place for Vodafone Idea, I feel the market would have consolidated with two major players, namely Reliance Jio and Bharti Airtel.
They're not even ready for the spectrum auction that is yet to take place, and they want to postpone of that. So that shows their inability with one level low rating.
Pardon me? Yeah, that will take place in this year itself.
So as of now, this is the last rating that they have received. So we've considered these 4 players according to the top market share that they hold. And
By taking in Tata Teleservices to our fold, we expect the revenue and customer market share to increase and increase by 30% approx. And we'll be getting around 40% of liberalized spectrum from TTSL as well, which is highly advantageous for Airtel as of now.
Hi, folks. Thank you for the presentation. Can you just go to this specific slide? 27, please. One down, yeah. Which are the peers or competitors that you have taken in these average of top 4 competitors?
We have taken Vodafone Idea, Reliance Jio, BSNL, and Tata Teleservices.
And net debt by EBITDA, which is essentially leverage.
Yes.
For Bharti, I think it's around 4.5-ish, right? And for peers, you're saying it's like 30 times?
That value is so huge because that is skewed towards that end because of the presence of Tata Teleservices. So basically, that average.
So are
is
there
skewed
outliers? I
towards-
mean, is this?
But even if we remove Tata Teleservices, we see Airtel stands around 4.4 with Reliance Jio around 7 and Vodafone around 11. That are the values of net debt to EBITDA.
so even excluding them, Airtel holds a better position.
Okay, so at the instrument level, there are few domestic as well as few foreign currency, right? Euro, dollar denominated. I think there's a covenant which says that if the leverage goes beyond 4, then there's a default, right? So if it is around 4.5, are you aware of anything? What happened this year in terms of the?
See, in the Q3 chat transcript, in the chat transcript, this question was raised, and we see that. Let me just put it through. As of now, the investment grade rating is given, and that is not going to affect the covenants. And if at all such a situation arises, Airtel will be looking for refinancing. So, I mean, this is what as far as we know.
Okay, never mind. So my question was a little different. I said, have they defaulted on covenant?
Okay.
So that's okay. So we can move on. You said by 2021, I'm assuming some sort of projections, right? And you expect EBITDA to be around 41%, did you say?
For the consolidated.
At the console level, right? And what is the consolidated level today? Like, say, LTM margin?
EBITDA margin is around 37 point, not 37. It's around 30.2.
And what are your assumptions for this, huge 10-11% increase in EBITDA margin? And
So the main assumption with the EBITDA increasing to that level, one is the data consumption is per day per consumer is expected to increase. It is currently 1 to 1.5 GB per day. It is expected to grow to 2 GB per day. So this means that and with Airtel also rolling out 4G strategies, so there is a synergy between what customer want and what Airtel is giving out. So with this, we can expect that the customers are ready to pay any price for what they want. So and we also see that the tariffs are slowly increasing. And based on a few sources, we got to know that the ARPU is expected to hit 130 by this December. So with all this, we can foresee an EBITDA increase to that level.
And we have used the ARPU projection and customer base projection to arrive at that value.
Are you aware that there is abolition of inter-carrier connectivity charges of 6 paise, which will?
By
and
2020.
do you see this as a credit positive or negative for Airtel?
Its impact will be marginal.
So yeah, if it happens really sooner, then it is any day a very big negative hit. So by the time the prices slightly settle and increase, and by the time this IUC charges cut, I think the effect will be a little marginal.
That is later to take place by 2020, Jan 1st, 2020. But by that time, its effect will be marginal.
All right. Thank you.
Thanks. Compared to?
Compared to, sorry, sir? So we're really sorry, but we don't know the exact values, but we're very sure that in India, it is, if you rate the companies, it is among the bottom most in terms of ARPU. Be it just in case of... Yes, sir, yes. One among the lowest. Definitely one among the lowest, sir, yes. Yes.
Africa. Sir, it is true only because if you take Africa business of Airtel, Africa is contributing really well to this group, so that is substantiated there. But if you take the total Airtel group's revenue, 1/3 comes from Africa, 1/3 comes from other business, and only 1/3 comes from mobile. So 2/3 is already covered right now. But even if if we can revive the mobile business, it's a positive for Airtel group.
Sir, and currently the major players in India currently are Airtel, Jio and Vodafone Idea. So Vodafone Idea is already lagging behind, and even just in case Airtel also quits, there can't be a monopoly in India with only Jio rolling currently. So it's not a right move even for... So, but with the scope and with a good bottoming out, Airtel is not in a state to leave India. It really has a very good chance to compete and give the same defeating thing to Jio as well. So,
One more question. This debt to EBITDA ratio, this 4.5 for Airtel, what is it for Jio?
7x.
And they are getting AAA.
Oh, yes.
Can you correlate the two? With 7 they have AAA, and with 4.5 you are recommending AA for Airtel.
So we have not decided the AA rating just on net debt to EBITDA factor. It is a combination of 6 factors, and Jio has outperformed Airtel in majority of the factors. So taking into consideration just net debt to EBITDA, I mean that is not possible.
thank you.